Picture this, us together, gliding gracefully upon a gondola through the enchanting canals of financial wisdom. Lean in. You hear that? The alluring whisper of fiscal prudence? I do. Shh. Let it envelop you and allow me to guide you to your financial future. Oh, sorry. Got carried away. 8 money numbers you need to know. Let's get to counting. Diving into the realm of after-tax income, or ATI as I call it.
Nobody calls it that.
This number is pretty much the baseline for your personal finances. Keep a close eye on your pay stubs, yearly tax returns, and familiarize yourself with potential tax deductions and credits. These can offer significant savings. Moreover, hobbies or side gigs can unveil additional tax breaks, turning passions into sweet, sweet profit. And never underestimate the value of an annual consultation with a tax professional. Their expertise can unlock any loopholes you may have overlooked, ensuring your hard-earned money stays where it belongs, in your pockets. Next up, we've got monthly expenses. This is everything that you spend money on in a given month. The obvious idea here is trying to keep this number lower than your after-tax income. But keeping a keen and constant eye on your expenses can ensure that your budget stays balanced and your spending stays purposeful. Using budgeting apps, a spreadsheet, or keeping a spending diary can help you see everything in one place, including where the leaks might be. Keep things categorized and check in on your spending often. You might discover 7 streaming services that your wife signed up for and didn't tell you about. Sorry, too close to home? All right, let's get into debt. Let's get out of debt. Here's a simple debt hack. Grab a piece of paper, write down all of your debts, and circle the ones with the highest interest rates. Those are the pesky ones you'll want to tackle first. Consolidating your debt could also be a game changer, giving you better terms and maybe even a lower monthly payment. Now, when it comes to paying off your debts, try to pay a bit more than the minimum each month. Trust me, it'll make a difference. And hey, while you're working on becoming debt-free, be a bit wary of racking up new high-interest debts. It's all about keeping that momentum going and staying consistent. When it comes to savings, it's pretty straightforward. Set up an automatic transfer from each paycheck, so you're always setting a bit aside. It's like giving future you a little gift. Make sure you've got that emergency fund, typically 2 to 3 months worth of expenses, because life loves throwing surprises. And hey, find a savings account that lets your money grow. Think compound interest. Every once in a while, check in. Got a bonus or a raise? Maybe bump up that savings rate. Remember, savings is all about giving yourself options and peace of mind. Just looking out for you. You think you know how interest rates work, but you might not. When you're borrowing, whether it's a loan or a credit card, a lower interest rate is beneficial as it means you'll pay less over time. On the other hand, when you're saving money or investing, you might want a higher interest rate because it means your money will grow more quickly. With savings accounts, try and always compare bank rates to ensure you're getting the best deal. High-yield savings accounts can also offer a nice boost, but if you're game for a longer commitment, CDs or certificates of deposits might be your ticket because they lock in higher rates for a set period. Bonds, they're like lending your money to companies or the government in exchange for periodic interest. No matter your choice, consider spreading your money across a few options. It's all about balancing growth and security. So this isn't technically a money number, but I'm gonna make an exception because it's important and it's close enough. I'm talking about compounding. Ever heard of the snowball effect? This is that, but for your money. Say you put $100 in a bank and it earns 10% interest in a year. Now next year, you're not just earning interest on the $100, but also on the interest you earned, or 110. This keeps building up and the magic really starts to happen based on how many times it compounds. Some banks might add this interest to your total every month, others every year. This can lead to some pretty impressive growth. Here's how to figure out your compounding rate. Dive into the details of your account or even that fine print on the paperwork. Keeping an eye out for terms about compounding. Spotting words like monthly or annually can give you a clue. And if you're feeling a bit lost in the details, there are online calculators to help out, or simply give your bank a call. They'll have the answers. credit scores. Think of this number ranging from 300 to 850 as your financial report card. It's a number that tells potential lenders like banks or landlords how good you are with money. The higher the number, the better. How's it calculated? Well, the biggest part, 35%, comes from your payment history, like if you're punctual with paying bills. Around 30% is based on how much you owe versus your total credit limit. How long you've had credit matters too, making up about 15% of your score. The variety of credit types you have and how often you're opening new accounts play smaller roles, each influencing about 10% of your score. A solid credit score is your ticket to favorable loan terms and interest rates, so keep those bills in check, manage your debts wisely, and don't forget to peek at your credit report now and then for any sneaky errors. A quick Google search and you'll get all the resources you need. Ever Googled a celebrity's net worth just for kicks? Ever Googled your own and wondered why there's no results because you're the star of a highly successful financial education series? No? Just me? Well, understanding your own might not land you on the cover of a magazine, but it's super important. It's basically everything you own, like cash, investments, property, that crazy unicycle in the garage, those collections of boomerangs, minus everything you owe, like loans or credit card debts, cars. Do the math, and bam, that's your net worth. It's like a financial snapshot showing you where you stand. So while it's fun to know that a certain movie star is worth $1 gazillion, keeping tabs on your own net worth can help you star in your own financial success story. Thanks for checking out the Cashologists by FNBO. Don't forget to like, share, and subscribe for more financial adventures. Until next time, I'm Justin, wishing you smooth sailing on your financial journey.